Just taking a look at the linkage between here, Daniel, between the Federal Reserve and what it does, and indeed what energy markets do as well. And how does this banking crisis play into what we've been witnessing, as David was mentioning there, the turmoil in the energy sector?
Yeah, look, I mean, with, I suppose, the increasing sort of financialisation of commodity markets, these type of crises can impact sentiment, and clearly, with the huge sell-off we're seeing, that's been the case this time around. But ultimately, it's not driven by demand-side issues, in particular this, in the US. I think the crisis is a lack of confidence, and look, once that's re-established and stabilises, then I think the market will look at the fundamentals. And certainly from our point of view, we're not expecting to see it have a huge impact, particularly outside of the US. And certainly China, as it reopens its economy there, is expecting to provide a large chunk of the growth in oil demand we expect to see this year. In fact, about 50% or nearly 1.5 million barrels essentially in growth this year. So, if China ultimately performs better than we expected, I think the market's actually going to look relatively tight. And so I think the banking crisis is obviously I think an opportune time for investors if they're looking to re-establish bullish sort of positions in the oil and broader energy markets.
Dale, why hasn't that China reopening story really supported crude? I mean, I think everyone, those oil bulls out there that was thinking $100 oil was going to come this year, that really hasn't quite played through. Why do you think that China's, I guess, reopening story is still not supportive of oil prices?
No, it's not. It's been mitigated by this tighter monetary policy by the Fed, and ultimately, I think what the banking crisis could create is a shift in those expectations. I mean, we're now seeing obviously the market pricing in rate cuts by the end of the year, as opposed to continued sort of hikes, and that has been a headwind for commodity markets and oil in particular. That balance between weaker growth in advanced economies and the strength out of China. I think if that does shift, then we could actually see a broad benefit from that change. But yeah, at the moment it's been that in combination with easing supply side issues. I mean, there's no doubt that the ability of Russia to continue to export at relatively high levels has also eased concerns of shortages there.
Daniel, the gold trade has become popular recently. You're seeing flows into big ETFs. You're seeing the price itself, of course, $2,000. What's your outlook on gold? How much more do you think? How much more upside do you think there is?
Well, I mean, we had a short-term target of $2,000 an ounce, so clearly it's come a lot earlier than we thought. I mean, I would say the investor allocation is actually still relatively low to gold in the broader precious metal sector, and I think this banking crisis has highlighted, I suppose, that those haven assets which have predominantly been flowing into sort of the US dollar, and if we are expecting to see a weaker dollar over the course of this year, gold is the perfect asset to really park your money in that type of environment. And that's being reflected in central bank buying. We've seen that perform really strongly over 2022, and it's continued into this year. But if we continue to see the inflows now on the retail and institutional side in the physical market through the gold-backed ETFs, I think we've still got a lot further to go in this rally.